Toronto's housing market is shifting and fast. Home sales in 2025 are down 23% compared to the last year. Home prices are down 4%. So sales and prices are down, but the number of homes listed for sale is up 8%. Buyers now have way more options than ever because on average, all of those homes are taking a month to sell. And on top of all that, mortgage rates have been coming down. So we're expecting a huge rush of buyers to get back into the market. Yet, they're not. So the big question is, will Toronto real estate prices crash in 2025? Is this just a correction, or are we in the middle of something much bigger that's actually going to lead to falling home prices? Today we're looking at what's really driving the Toronto real estate market and whether we're headed towards a market crash. Let's get into it. First, what's actually happening in the market right now? The average GTA home price is down by about 4% compared to this time last year. That's tens of thousands of dollars shaved off property values, especially in downtown Toronto condos and detached homes all over the city. And at the same time, new property listings of homes being put up for sale are rising pretty quickly. In fact, new listings are up by 8% year over year. That's nearly 1,500 more properties for sale listed in a non-competitive Toronto real estate market. There are more homes sitting on the market that aren't selling, and buyers have way more options than they did just a year ago. But here's the twist. Mortgage rates have been dropping since last year. The lowest 5-year fixed rate I found was 4.24% with the Bank of Montreal. Their lowest variable rate was 4.65%, both with a 20% down payment. Just 10 months ago, the rate would have been easily over 7%. So we've got falling home prices, increasing housing inventory, and mortgage rates coming down that's helping with affordability. Sounds like a soft landing so we can avoid a housing market crash, right? Well, maybe. Let's talk about market correction. How long will this market correction last? And what could turn this market correction into something more serious, even a crash? We're in between two market cycles right now. You could say we're transitioning out of a recession towards a recovery because in 2022 to 2023, we saw 10 interest rate hikes from the Bank of Canada, which led to an affordability crisis. Only because buyers either didn't want to pay high interest rates on a mortgage or really just because they weren't getting approved anymore. Getting a mortgage of more than 7% wasn't ideal, and in a lot of cases, renting became a better option. So home prices crashed and demand from buyers fell because of the high amount of uncertainty in Toronto's housing market. The correction started back in 2022 and continued in 2024 when the bank started to lower the key interest rate, which they've done 7 times now. And by the way, they're already forecasting to drop the rate at least 2 more times before the end of this year with a target of 2.25%. What do you think about that though? I'm curious to know if you think lower interest rates this year are actually going to spark more interest and demand in Toronto's housing market. Let me know in the comments because there are still 3 major risk factors to consider. Number 1, mortgage renewals. Thousands of Canadians are renewing their mortgages this year, many at double the rate they had 5 years ago. That could be a payment increase of 30 to 50%. That kind of payment shock could force investors or even families to sell their home. Number 2, increasing housing supply. If new listings keep rising and buyers remain uncertain about the market, we could continue to see downward pressure on home prices, especially in oversupplied areas like downtown Toronto condos, where prices have already fallen 7% from last year. And number 3, the risk with pre-construction condos. Over 25,000 new condo units are expected to be completed this year in the GTA. That averages out to around 60 buildings within a 140-kilometer distance east to west. If buyers can't close on their pre-construction condo purchases they made a few years ago, either because prices fell or they can't qualify for financing, some could be forced to walk away from the deal and to leave their deposits behind with the developers. Or they might even sell their units at prices that are less than what they paid for, in some cases losing hundreds of thousands of dollars. And I can tell you that this is happening in today's market, with some buyers losing $200,000 while also getting sued by the developer. If that happens at a macro scale, we could continue to see sharp declines in condo values. But hold on and let's just zoom out for a second here, because even with all these risks considered, a real estate market crash is far from guaranteed in 2025. There are a few strong fundamentals still supporting the Toronto real estate market. First, immigration. Canada is planning for 674,000 new immigrants this year, many of which will settle in the GTA. That adds pressure to both rental and resale markets. The inflow of new residents will spark more demand, even on the condo market being the more affordable housing option, which could eventually bring prices up. Second is interest rates. The Bank of Canada is forecasting at least another 2 rate drops this year, with the next one coming as early as June. Lower rates would boost affordability and could reignite demand, especially from first-time homebuyers who've been waiting waiting on the sidelines. The third is supply issues. Even with the recent wave of new listings, we still don't have enough housing supply, especially when it comes to affordable family-sized homes. Construction is still slow due to high costs and developer pullbacks. That long-term shortage is another reason why we could see upward pressure on Toronto home prices. And with these three reasons, do you think Toronto real estate prices will crash in 2025? Let me know in the comments what you think, and don't forget what we talked about in the beginning. Here's a recap of what the data is telling us. Sales are down 23.3%, prices are down 4.1%, new listings are up 8.1%, and mortgage rates are still coming down. And also, homes are taking a month or two to sell. This looks like a market in transition, not a market in crisis. Specifically, a real estate market that's in transition out of a recession, but not yet into an expansion. This is still the recovery cycle, but that could change quickly if confidence in the housing market drops or if job losses continue to increase. For instance, TD Bank says it's laying off 2% of its global workforce. That's big news, and it's likely because the banks are seeing lower profits from reduced lending activity. Banks make money on people borrowing money, and people aren't in a rush to borrow money right now. So what should you do if you're in the market right now? If you're a buyer, this might be your chance. You've got more choice, less competition, and also falling mortgage rates. But don't overextend yourself. Make sure you're financially comfortable even if rates go back up. If you're a seller, this is the time you need to price your home strategically. Homes that are priced too high are sitting on the market. Homes priced too low are also sitting on the market. The market is sensitive right now because of the high amount of uncertainty. So will Toronto real estate crash in 2025? Right now, it doesn't look like it, but this market is in a transition period that's trending towards a recovery, and the next 3 to 6 months will tell us a lot. Let me know what you think in the comments. Are you buying, selling, or just watching to stay updated on what's happening in the market? And if you found this video helpful, subscribe for more updates. New videos are coming out every single week with market updates and the best tips to help you reach your real estate goals. Thanks for watching, and I'll see you in the next one.